Great. I think we'll go ahead and get started. Thank you all so much for being here. My name is Kit Harrington. As I said, I'm the Communications Director for Voices for Vermont's Children, which is a research-based multi-issue advocacy organization focused on achieving equity and justice for children and youth in Vermont through systems change. And we started this lunchtime series in January with the goal of drawing attention and engagement to some of the really critical issues that we work to lift up in the State House every day. And so many of these issues revolve around economic justice, because economic justice is foundational to the health and well-being of children. And so many families in Vermont still do not have access to the resources they both need and deserve. And while we're frequently sold a narrative of that personal wealth is somehow a reflection of our individual decisions or worthiness, access to financial stability and flexibility is really a reflection of policy choices and the larger systems they uphold. So today we're here to talk about a policy choice that provides families across Vermont with access to cash resources during a critical period of time, the Vermont Child Tax Credit. We're very grateful to be partnering with Public Assets Institute on this and are incredibly fortunate to have some fantastic speakers here today from around the state who are experts in this area. Thank you so much to Julie, Rebecca, Travis, and Liz for making the time to be here. And they're going to share more about the credit as it exists now, as well as resources that are available to help ensure that families are able to access these kinds of credits and maybe help us look to the future as well. And thank you also to Hannah for providing interpretation. So with that, I am going to hand it off to Julie.
Great. Thanks everybody for being here today. I'm excited to see some names and faces I know and meet some new folks. So as Kit said, we're going to be talking about the child tax credit today, Vermont's very new child tax credit. We're super excited about it. And I'm actually going to turn it to Rebecca Balin from the Economic Security Project to kind of start us off and frame the conversation. So take it away, Rebecca.
Thank you so much, Julie. I'm so happy to be here. Thanks for having me. Let me know if you can't hear me, if there's anything wrong with my headphones. Okay, so I'm Rebecca Balin. I'm Deputy State Campaigns Director at Economic Security Project. We are a national organization that works on two main fronts, fighting monopolies and corporate power and the money they hoard, and guaranteed income, bringing money back into people's pockets, regular people's pockets. So we do stuff on the federal level and then on the state level. So we support, in addition to kind of broader guaranteed income, we support tax credit campaigns in states across the country. So I'm gonna first tell you our understanding of what GI is, why we fight for it, and where the tax credits, like child tax credit, comes into play. So a guaranteed income, I don't know how many folks, I don't know if you feel comfortable like raising your hand or raising the image or saying yes in the chat, but how many folks here are familiar with the concept of a guaranteed income? Okay, so we have a few. We have a few, okay. Zachary, you guys a thumbs up. Thank you, Zach. Okay, great. So it sounds like there's some familiarity, but I'm just going to give a little summary and you guys can tell me your thoughts on that and if it resonates with what you understand it as. So guaranteed income is simply regular cash payments with no strings attached, no work requirements, just a basic guaranteed income. It's different from what we would call a UBI or a universal based income because we don't believe it should go to the very rich, right? We think this should be funded by those who make more money and for the rest of us, sort of a basic income floor. And that's the reason why we're fighting for it is it's a basic income that nobody can fall beneath a certain floor. Nobody, it's ideally so that we can fight poverty and economic inequality with this. It gives people flexibility to do what they want with it. So instead of saying you have to spend it on this or that, it's trust-based, right? we all know what we need in a certain month or day, right? And trust families and workers to spend the way that they see fit with limited strings. So, and one thing I want to say is, doesn't replace institutions or other benefits, right? We need things like public schools and childcare and libraries, right? All these things that the society needs to thrive. But this just adds, like I said, it's almost like a basic minimum wage for everybody. And we've seen versions of guaranteed income institutionalized or piloted. In 2020, I think the best example, which really got people to start thinking about guaranteed incomes as a less radical idea. We saw it when the federal government during COVID gave emergency cash payments to people. So that really happened in two main ways. One was the stimulus. So many of us got like $1,000, $1,500, and people who have kids got an expanded child tax credit from the federal government. It was no strings attached. It was more money, and it was an automatic payment. These are basically guaranteed incomes, and it really got states to think about, oh wow, and individuals and policymakers to think about, wow, this is huge. The CTC alone pulled over almost 4 million kids in the country out of poverty. It made a huge impact. People spent it on, not that it matters, frankly, but people spent it on groceries and childcare and other daily needs. But let's say you want to take your kids out to the movies. I think that's okay too, or have a little savings. And so, we saw that the stimulus checks ended. The expanded child tax credit ended, the really generous one that most families got. And now, and I'll come back to this, but now we'll see states are starting to lead the way on the state level. So we'll come back to that. But we also have pilots of guaranteed incomes supported. Many of them are supported by Economic Security Project. So sometimes they're funded by mayors or counties, sometimes they're funded by foundations, but they're often guaranteed incomes that will be given to a certain population in some cities. So it'll be, homeless youth or low-income youth out of high school or single mothers. And so we have about 100 of those, and possibly more in more than 75 cities. So there's a lot of pilots out there, but there is a sustainable and institutionalized way that we can actually get closer to a guaranteed income using tax codes that already exist, which goes back to the aforementioned child tax credits and earned income tax credits. So, and I said, like, states across the country, after the federal government did what they did and then ended it, states are like, wait, we want to do that too. Vermont recently expanded, and I know Julie and others will be talking about it, but recently expanded their child tax credit, instituted a child tax credit, I believe, and a very generous one. And 8 other states, I believe, including Washington, Oregon, DC, and New Jersey, also created a child tax credit. So, and so what we're seeing now is the states that implemented them recently want to expand them even more, to be even more generous. We're seeing states across the country starting new ones as well. So we're both for the EITC and the CTC. So these are tax breaks for families and or workers or just regular people. We often talk about tax breaks in terms of tax breaks for the wealthy, tax breaks for corporations, tax breaks for businesses as an economic development. But we're talking about tax breaks for regular people, where that money will go right back into the economy, as I said, in terms of maybe some entertainment for your family, food, and other services, and childcare, right? That goes directly into the economy. And so, and the way that we can make them look more like guaranteed incomes is by doing things like eliminating work requirements. There's a lot of reasons why somebody might not be able to work when receiving a tax credit. Maybe you're a grandparent and you're retired and you're taking after your children. That actually happens a lot. Maybe you have a disability that prevents you or makes it difficult to enter the workforce, and having some extra income can help you get through while you're looking after your children. Maybe it's, I mean, there's so many reasons. Maybe you're in school and trying to finish school. So eliminating work requirements is a huge way to get it closer to a guaranteed income. Automatic payments is, you know, if we can get those payments out the way the federal government did quickly, we can give more money to more people, expand, right? We all know that you might not fall beneath the federal poverty line, but you might still be struggling. So if we can get more working and middle class people access to those benefits and those tax credits, then we're going to help a lot of people, and it's going to look more like a guaranteed income. And the other thing that we want to be able to do eventually is try to make those tax credits monthly or periodic to replicate more of a salary and an income. There's a lot of studies that show that it's just better for people to have access to monthly payments or periodic payments instead of just one lump sum at the end of the year. It's easier to plan out that way. So let me see if I'm missing anything here. I think I covered everything. So I'm excited to hear questions, but I know that, you know, we want to get the word out about what Vermont's been able to do, the new tax credit that I think is coming into effect this year, and how we can fight together to make it even better than it is. Julie, did I miss anything?
No, that's great. Thanks, Rebecca. So I think what I'll do is I'll jump in and then we'll save conversation for the end. So thanks everyone for being here today. As I mentioned, I'm Julie Lowell. I'm a policy analyst at Public Assets Institute. We're a nonprofit, nonpartisan, just fiscal policy think tank in Montpelier. Our mission is to improve the well-being of all Vermonters, advancing racial, social, and economic justice through research and fiscal analysis, public engagement, and empowerment. And before I forget, I am going to try to share my screen and make sure I do it right. Okay. Now I've lost all of you, but I think you can see what I'm seeing. So an important part of advancing racial, social, and economic justice is to make sure, as Rebecca was talking about, that everyone in the state can meet their basic needs. Wage and tax policy are two pieces of the puzzle that can work together to ensure that this happens. So by passing minimum livable wages, lawmakers can ensure that people with paid employment are brought up to a certain floor, but employers can only cover so much as a family size grows, and tax credits can fill in the difference, with the new Vermont child tax credit now contributing to the economic security for families with children in Vermont. And of course, as Rebecca mentioned, not everybody is working for whatever reason. And it means, so there's other tools and policy pieces that also need to fill in those gaps so those families are meeting their basic needs. So before I get ahead of myself, I want to make sure we're all on the same page about tax credits generally. I think this crowd knows them pretty well, but just so we have a common understanding. A tax credit is money that's taken off your total tax bill, right? The government offers these to incentivize certain behaviors, think solar energy and electric cars, or to recognize the cost of certain things that might eat into the income of certain groups, like the cost of children and other dependents or the cost of education. And in terms of children specifically, the government offers tax credits to offset extra costs associated with them sort of generally, right? Housing, food, clothing, diapers. But then there's also this other set of tax credits that are called child independent care credits that specifically offset the cost of paying for someone else to care for your child or dependent. I just wanted to name those two differences because I'm specifically talking about the child tax credit, which is that more general credit. And some of these tax credits are refundable. Right? So when we talk about a refundable tax credit, after you've paid your tax bill, or if you don't have a tax bill, any leftover credit is paid out to you, giving families money in your pocket. And one of the strongest refundable tax credits for families with children is the Earned Income Tax Credit, often referred to as the EITC. And given the importance of this and how it pairs with the child tax credit for some families, I did want to give a few minutes to talk about the EITC and who it helps. Okay. So the EITC provides extra income to workers who earn less than a certain amount of income. And the key piece of this is that they have to have earned income. So for folks who are filing federal and Vermont taxes, they qualify for both the federal and the state EITC. Each of the credits has all the same qualifications, but Vermont's credit is 38% of the federal credit. In particular, the EITC targets tax filers with children. These families receive the largest benefits. And so for the purposes of EITC, a child's defined as being under 19 or 24 if there's a student in the house, or of any age if the child is permanently and totally disabled. But single filers without children who are 25 to 64 also qualify for the credit. And in order to qualify for the credit, everyone claimed on the tax filing must have a valid Social Security number. So this leaves out many workers in both in Vermont and the country who pay taxes as part of their job and contribute to the community. Now, as I said before, for families without children, the credit is quite small, as you can see on this next chart. It peaks at less than $1,000, and it's only for the lowest paid workers. For a filer with one child, the credit increases a little bit. It peaks at a little over $5,000 a year before tapering off, and it tapers off at a slightly higher income for married filers. And then finally, for married filers with 3 or more children, this is the most generous credit. This is around $9,500 at its peak, and this is the federal and state combined credit that a family would get. So a family with $25,000 of household income gets closer to $35,000 with this credit. So for families with children, this means real cash in their pockets, and yet these benefits still fall off well below what Vermont calculates as the amount a family of 3 or 4 needs to cover their basic needs. So in Vermont, the new basic needs budget that the Joint Fiscal Office publishes just came out, and their calculations show that a parent with one child needs around $70,000 a year to meet their basic needs, and that goes all the way up to $100,000 for a 2-parent household with 2 children. So as you can see here, these tax credits fall off well before families, they don't meet all the needs of all families. And so this is really a piece of policy that should be adjusted by Congress, so these credits match today's economic realities for families. So during the pandemic, refundable tax credits, they were really having a moment, as Rebecca talked about. There was a lot of awareness that people needed more, and government responded. There were increases in the EITC benefits for single filers. They both got larger credits, and single workers over 19 were eligible for the benefit. And the federal child tax credit also expanded. So currently, and before the pandemic, the child tax credit was set at $2,000 per child under 17. In 2021, this increased to $3,000 per child under 18, with an additional boost of $600 for children under 6. So it was a total of $3,600 for each child under 6. And the credit went from being a tax credit to a refundable tax credit. And unlike the EITC, the earned income tax credit, it didn't have earning requirements. So this is such an important part of this. And I'm going to, I think we're all going to keep repeating it, because everyone who had low income was able to get the credit to help take care of their children. Half of the expanded child tax credit was available to families before they filed their taxes paid over 6 months. And the result was a drop in poverty nationally and across Vermont. So as you can see in this chart here, this poverty measure, which takes into account government support, like the child tax credit and the earned income tax credit, shows that Vermont poverty dropped. And just, to put that in context, during a national pandemic, thanks to government support, poverty actually went down. It's pretty impressive. And as Rebecca mentioned, poverty didn't just drop at one time in the year for families, it dropped each month during the latter part of 2021, with cash coming in to cover the cost of housing, food, and other basics. In Vermont, these credits supported an estimated 104,000 Vermont children, with the most impact on families with low income. And it was especially impactful for Black families in Vermont who face the highest rates of poverty. But again, as we all know, that the expanded child tax credit has since expired, and we know children have fallen back into poverty. Seeing the success of the federal expanded child tax credit, Vermont lawmakers began exploring a state child tax credit last January, and they led the way in passing the strongest child tax credit in the country, or I guess not in the country, but of any state in the country. So H510 went into law last May, and starting with 2022 tax filings, it provides a $1,000 tax credit to families per child under 5 in the household with no earned income requirement. It's available for households and begins to phase down at $125,000 of household income. And again, it's fully refundable, meaning that the families most in need of support can get the cash that they need. So we're really excited about the establishment of this credit. And yet we know that there's still a few ways it can benefit people even further. So while I want to praise the passage, I am going to kind of jump into where this kind of could still be improved. So for some families, this credit is going to flow into their bank accounts with absolutely no extra effort. They might not even realize it's happening. They're going to simply file their federal and state taxes as usual. But we need to make sure that the credit gets to the people who need it most. And the challenge is that households with the lowest income don't have to file their taxes. So in 2022, a single head of household with income almost to $20,000 in gross income doesn't have to file taxes. And a married filing jointly household with just under $26,000 in gross income doesn't have to file taxes. And of course, these are arguably the households who need that $1,000 the most. And if they also have earned income, these households stand to gain substantial resources from the EITC too. I'm going to just put that part up there again. If you look at that, that $26,000 mark and that $20,000 mark, you can see that this is about $5,000 that these families could be missing out on if they have earned income in that range. And we know that not everybody who qualifies for these refundable tax credits is filing their taxes. In 2019, 17% of Vermont filers who were eligible for the earned income tax credit didn't file for it. This was nearly 12,000 filers, 4,500 of whom had children. This left an average federal credit of over $2,000 on the table for families with one child and up to nearly $4,000 for families with more than 2 children. And these dollar amounts that I just shared, those don't include additional state earned income tax credits that families are missing out on. Those are just the federal dollars. In total, Vermont lost an estimated $12 million in federal benefits in 2019. This is money that could have been helping families meet their basic needs and that would have been pumped back into the local economy. So making sure that families get these credits is a really important priority that the state needs to spend some time on. In the short term, the state can support families getting these credits by increasing outreach to people who are likely eligible and not filing. So the tax department should send messages to new or intermittent tax filers. State departments like the Economic Services Division should notify participants about the credit. And the state should work with community-based organizations to get the message out about the credit and to get it out in multiple languages. They should also work really closely with our community-based organizations that help people file their taxes, which Liz and Travis are going to talk more about. Longer term, Vermont should be monitoring the uptake of the credit, using the information to create more accessible systems, like a simplified tax filing form, which is what the federal government did in 2021 for the expanded child tax credit. Next, we really need to make sure that the credit is increased for those who need it most. While Vermont's credit is the most generous in the country, other states are asking for more this year. We know that there's a big push across the country to get people's needs met. And we know for those households with the lowest income, $1,000 a year isn't going to be enough for them to meet their basic needs. So as you can see from this chart, people who receive Vermont's minimum and Vermont's average wage, they still fall short of their basic needs by tens of thousands of dollars. So a progressive credit that targets larger payments to those with the least could help move families closer to that line. And we also could be covering more people with the credit. Right now, the credit's limited to people who have children under 6. This leaves out families who can't meet their basic needs, who have older children all the way up to 18 and adult children with disabilities. And as we can see in this next chart, I'm going to put up, poverty doesn't stop just because kids turn 6, right? While poverty for families in Vermont is at 6%, poverty rates are closer to 12% in households with kids under 5 and remain around 10% in families with kids 5 to 17. In addition, this credit is only available to those who qualify for the federal child tax credit, which means you have to have a social security number, which leaves out many people in our community who live and work here. Maine and New Mexico are 2 states that have expanded tax credits to state residents rather than rely on federal qualification. And finally, one of the major successes of the expanded child tax credit, which we've already talked a lot about, is getting money to people monthly. So this chart's kind of interesting to look at. This is the impact nationally of the expanded COVID relief on families. And this bottom blue line shows how the poverty rates fell when the child tax credit went into effect. So you can sort of see the impacts in March here. This was when the last economic impact payment hit. And you can see that poverty dropped. There was a big drop, then just one big drop for 1 month before rising again. But then in July, when the monthly payments went into effect, poverty fell and it stayed low for 6 months until the monthly payments stopped. And then again here in March, you see another big drop just once a year when likely people filed for the rest of their tax credit. So beginning to create these periodic payments is really important to families' financial stability. But creating the payments isn't an easy fix for a state, as getting people monthly credits might unintentionally impact some other benefits that people receive. So the state should continue to explore and research monthly or quarterly payments so that the unintended consequences can be addressed and periodic payments can be implemented. So Vermont's child tax credit, it's really an important new tool that will help families better meet their basic needs. And it's one that we can keep expanding on with these points I've made above to make sure that families get the credit they need. So now I'm going to pass it over to Travis and Liz so they can talk more about the work at the community action agencies in Vermont and how families can access these credits.
Julie, should I just share my screen? Does that make the most sense?
That'd be great, Liz.
Okay. Yep. Can everybody see where it says VCAP? Yes.
Great, Liz.
Okay, thanks, Travis. So thanks for having us. My name is Liz Scharf, and I'm the Director of Community Economic Development and Food Security at Capstone Community Action, and I oversee our volunteer income tax assistance program. And Travis, go ahead.
I am the Community Action Network Director for CVOEO, so I have general oversight over our 3 community action offices, which is where our volunteer income tax assistance program is run out of, as well as the Chittenden-based homeless outreach services.
Great, thanks, Travis. So on this slide, you'll see that the VITA program is a program of VCAP, which stands for the Vermont Community Action Partnership. There are 5 community action agencies around the state that offer services to help low and moderate income Vermonters. Most of our services are around poverty alleviation. So we include housing supports, food shelves, weatherization programs for home weatherization, fuel assistance, financial and business coaching, our Head Start early childhood care programs, and the volunteer income tax assistance program. Also on this call, I do see my colleague Heather Alger from Northeast Kingdom Community Action, and she also oversees the VITA program for NECA. So Travis, why don't you take us and give us a little history and knowledge of what the VITA tax program is?
The Volunteer Income Tax Assistance Program is at its heart a mechanism to help lower and moderate income taxpayers get their taxes filed for free. The basis of this service are volunteers who contribute their time, energy, and efforts to get trained by the IRS and certified by the IRS to prepare taxes within scope of what the VITA program provides. And it is a narrower scope. For instance, your household has to make generally $60,000 or less. And many of the VITA volunteers are not certified to prepare other states' taxes. So if you worked outside the state of Vermont, We may be able to help you do your federal taxes, but we couldn't help you do your New York State taxes. So it is a limited scope program. And with that said, the Community Action Partners last year provided assistance to over 4,000 households in filing their taxes.
Great, thanks, Travis. And this year is a little special in that we received some base funding in the Vermont state budget to provide 5 full-time VITA site coordinators for the 5 community action agencies. The reason that we did that is because this really isn't a program that runs from February to April. It begins in basically October when we start to recruit volunteers and build our partnerships. We have to train all of these volunteers who have to become, as Travis mentioned, IRS certified as either basic preparers or advanced preparers. So there's exams involved in that. Then it's scheduling appointments and working with our volunteers to file those 4,000 returns that Travis mentioned. But then during the rest of the year is when all the other things happen. People get letters from the IRS. They didn't get their tax return. They forgot to file their homestead or property tax adjustment. So they come to us to have that other, all that other work done outside of tax filing season. Also, we have so many people requesting the service that towards the end of tax season, we have to file extensions because we simply can't get it done by April 15th. So we file extensions, and then in the following months, we're working on preparing taxes for those folks.
And the other thing I will add to what Liz has said is that just to put this in perspective, I think many folks probably realize that nonprofits are grant-based. The entirety of the volunteer income tax assistance program services that are run by the community action agencies have around a $75,000 grant that is split statewide to help us provide these services. By no stretch of anyone's wild imagination do we have grant funding that is actually specifically tied to supporting this program, except for that little IRS grant. So the funding from the state is enormously helpful to help us run a full, bold, strong year-round program, which is necessary to do the work and has only become more necessary over the many changes that have taken place in both federal and state taxes over the last few years. So it is both with gratitude that I'm grateful to the state for providing these funds, even as I say, it is also absolutely necessary to maintain.
And the word on the street right now is that the $400,000, which was in the base funding last year, is not in this year's base funding. And we need to get it back in. And we're actually asking for $525,000, which really is the amount that we need to support 5 full-time site coordinators and part-time during the tax season. You know, we have various sites outside of the main sites that we have to employ some folks to oversee the volunteers.
And these full-time staff, as Liz also mentioned, help to recruit, train, organize, and guide roughly 100 volunteers every year. And I believe that within a couple of years of having fully funded positions, we would actually be able to significantly increase the number of volunteers statewide and increase the number of people we can help through this program. But it does take time to build that base, to build that structure.
So I just wanted to briefly touch on what Julie was talking about with the child tax credit. And you'll see on this next slide where I've highlighted an example of what a very low income person will get from a child tax credit this year on the federal level. Because the expanded child tax credit was only 1 year, an example of a single mother who is filing head of household is on Reach Up, which is the temporary assistance for needy families, and perhaps made $2,800 in income at some point during the year and then has received Reach Up for the rest of the year. her federal child tax credit will be $45. So as you can see, that is no amount that actually has any real benefit to the lowest income family. So that $1,000 tax credit for the state is going to be much more impactful to this family. And as Julie also mentioned briefly, the child independent care tax credit, which often gets confused with the child tax credit because they both have the word child in them. However, they're very different credits. This credit is for when you pay for child care. And in 2022, that credit goes, the federal credit goes back down to the original credit. So 2021 really saw some amazing benefits that we're not seeing for the 2022 tax year. Travis, you want to talk a little bit about the EITC?
The EITC is right there with the 3 Square Vermont, or federally, the SNAP program, food stamps. EITC is the #1 poverty relief program at the federal level, with food stamps being the second most powerful poverty relief program. So EITC is also a refundable credit. I'm blanking on what else to say other than looking at this slide. It's something that we always encourage people to apply for. We always screen for participation in the EITC. It's just an incredible way of helping lower income families get a little bit of money back and help them be that much more successful and stable over the first few months following the tax filing season.
Yeah,
Liz,
and
you probably be much more articulate.
Well, no, the only thing I was gonna add was that we have to get the folks in the door to file their taxes. We don't have to wonder if they're EITC eligible. The tax program will do that for us. The software will tell us. But if they don't come in the door, they're not gonna get the credit. So it really is about education and outreach to make sure that these families are aware that these tax credits are available to them.
Again, it's
and I'll be honest.
I was just gonna say, it's a refundable credit. So every year, Liz will echo this, every year we'll talk to someone, sometimes during the summer, that says, oh, I didn't file my taxes. I only made like $7,000 last year. I only made $4,000 last year. And I'm like, it's not just about what you paid in federal taxes to get back. It's whether or not you may have qualified for a refundable credit.
Exactly. And I will say most people don't know anything about taxes, right? They don't understand why they're getting a refund. They don't know what part of that refund is the child tax credit or the EITC. I remember being shocked when we started to make more money. And I was like, how come we didn't get money like we did last year? I had no idea it was the EITC that my family was getting. So education is a big part of making sure that families are aware of these credits. And when it comes to Vermont, again, Julie mentioned this, we're looking at $1,000 per child age 5 and under in 2022. And I might add that it would be great to see that credit changed for all kids that are and make it similar or make it the same as the federal credit in terms of the age limit, because children over age 5 also cost money. And I would argue that they cost a heck of a lot more money than a child 5 and under. And there are some income limits, but the great thing is that you don't have to have income to file for this credit. So we have been working already with families in our Head Start and in our Reach Up programs to file for them to make sure that they get that $1,000 per child if they had kids 5 or under. I will say that the caveat, and I know that Heather and Travis will see this and have already seen this. One of the issues that we face with some of our lowest income filers is that there are family dynamics that make it challenging for people to get this child tax credit. And that may be that someone has already filed on behalf of their child, or there's a red flag that's been raised by the IRS that prevents that tax form from being filed. And I'll give you an example. I went to our Head Start program where we work with teen parents. There was a young woman who's only age 24. has filed taxes in the past, so she's in the tax system. When she went to file her taxes, she was denied this year and the IRS rejected her tax return. They had also rejected it last year. And when we got on the phone to figure out why, all they could say was, we cannot solve this problem over the phone. You will have to come to our Burlington office and make an appointment in person, bring your birth certificate, bring your driver's license, your children's social security cards and your social security cards, and maybe we can help you. So if you think about this young woman who, one, doesn't have transportation, likely doesn't have a copy of her birth certificate, this becomes all the more challenging. And that's where the community action agencies and the VITA programs are there to assist these families and help them navigate that difficult transaction of getting to Burlington, right? So that's really a part of the service, is not just filing taxes, but providing some of those wraparound services to ensure that our families are taken care of.
Absolutely, because in the same way that all of our agencies work with people who may be at risk of homelessness or experiencing homelessness to help them get ready to rent, which includes helping them fill out forms for subsidized housing. It also includes making certain that they have copies of their birth certificates, making certain that they have photo IDs if necessary, and copies of their social security cards. Our staff are already helping provide these services. And absolutely, by extension, when someone comes in for free tax preparation assistance, we're screening them for participation in 3 Squares Vermont. We're asking the question, do you have other needs that you're struggling with? Are you aware of the financial futures and growing money and financial literacy and capacity building classes that all of our community action agencies offer? So it's really, you're getting the holistic approach to working with someone when you go through the VITA program and the Vermont CAP network.
That's a great point. And then a few other things on the state level for that are a little bit that are improvements over the past years. Again, going back to this child and dependent care credit, the tax credit is 72% of the federal and child dependent care tax credit. So if you received $3,000 in a federal tax credit for child care, you'll receive an additional $2,160 from the state of Vermont. So these are, Vermont really is, I think, in the lead in terms of supporting families with tax credits. And finally, the Vermont portion of the earned income tax credit is 38%. So Julie had given an example of a family that might earn, over, around $9,000 in the EITC for a maximum credit. And then Travis, you want to tell us about how great we are?
I am continually amazed. I'm impressed by all of the community action agencies and the work that they do. I'm going to particularly point out Capstone and CVOEO, as together our 2 programs provide probably upwards of 90% of the VITA returns in the state of Vermont. And what's particularly amazing about that isn't just all of the work and the effort and the amazing volunteers we are lucky enough to work with. It's that we actually, Capstone and CVOEO, operate on slightly different preparation models. Chittenden Community Action, part of CVOEO, has the largest in-person VITA site in the state of Vermont, while Capstone has developed an extremely effective, more remote-based site. 2 different strengths, 2 different models, but they both work extremely well, and it gives us both room to grow should we continue to get this state funding and be able to look at ways of expanding our services. It really is. I'm so impressed with the volunteers and with the staff that help manage those volunteers, guide them, and of course, to some ancillary degree, prepare taxes themselves throughout the tax season. It is an enormous amount of work, extremely busy preparation sites. And as I said, we prepared over 4,000 households' taxes last year. And the amount of money that we help bring back into the economy, of course, helps those families. Also, every single family does not pay to have their taxes prepared. And the average cost of filing your taxes in the state of Vermont, according to the National Accounting Society, is about $176 to file a basic federal and state income tax return. So right off the bat, all of those families are saving those funds. They don't have to pay for tax preparation, and the tax preparation they're getting is equal, I would put it up against any paid preparer, given the IRS training and certification and the fact that we're often using the same software that the paid preparers are using.
And I would just add that it's the average gross income of the folks that we serve is just under 22,000. And that is really low, right? So we're looking at some of the most vulnerable Vermonters that we're helping ensure that they have access to those credits, but also to the homeowners, the low-income homeowners who are or moderate income who receive property tax credits. We're also helping those folks file as well. And then finally, you might want to take a snapshot of this because we won't go through the details, but each community action agency has a different way of connecting to file your taxes. You can also visit their websites. I will say NECA's website is in the process of being updated, so they don't have information there. So you might want to jot down Hannah's number there if you're thinking about taxes in Caledonia, Orleans, or Essex County. And you can also file for free at myfreetaxes.com. And that is actually great because our VITA programs receive credit for those taxes that are filed, and you can earn, and when I say credit, it means that the IRS adds those numbers to our counts, and that helps us get more money from the IRS to file, to help pay for the program. But myfreetaxes.com uses the same software that we use, and it has a little higher income threshold of $66,000 for any family size. And I guess that's it.
Listen, Liz, thank you so much. Thanks for all the work you're doing, and it's just really impressive the number of folks that you're helping get these benefits. So thank you for telling us about them and walking us through how we get and can refer people to your services more. So I'd love to open it up, and we've got about 10 minutes. I'd love to open it up to folks on the call to see what questions you have for us, what resources you might know about that you want to share, just an open conversation. I can look for messages in the chat, or feel free to raise your hand or just take yourself off mute and jump in. And I can start as people are thinking about things. Travis and Liz, I don't know if you know this number, but I'm curious, like 4,000 filers last year is a huge amount of filers. And the numbers that I researched said that we know 4,500 filers with kids alone aren't filing their taxes. Do you have a sense of what demand you can't meet of folks who already know about your services?
I would say for CVOEO, we don't have a specific idea, in that once we start telling people that our appointments are booked, we have never tracked the number of people we've had to say no to, which is a bit of a missed opportunity. We started thinking about that this year, that we should probably start trying to count the number of calls that we receive. We work with 211 here in Chittenden. They book most of our appointments for us at our tax site, which is being hosted at the University Mall in South Burlington, thanks to the generosity of the mall managers and owners who provide us free space in the University Mall to do the taxes every year in Burlington.
And I'd also add that our number is actually not people, it's tax returns. So that, is, we actually don't and aren't able to track how many people, but there's a lot, we know how many people do head of household, which means there are children. We know how many people are married filing jointly. And so we're probably reaching closer to, I would say, 8,000 Vermonters, double the amount of tax returns. And that was in the year before we had funding. So we're really hoping to increase that with places like NECA, SEBCA, and Brock ramping up their programs now that they have full-time people who can start to recruit volunteers. And that's why you know, this is our year where we're really excited and building these programs, and we need it back in the budget, right? We need this back in the budget. This is the biggest bang for your buck, for your state monies, and it affects the folks who really do need it the most. I calculated that if we did 6,000 returns, it would be on average 100,000 that we got. So if we do 6,000 this year instead of 4,000, that's about $65 a return, versus, as Travis mentioned, a minimum of 176. That's for basic. That doesn't include add on the child tax, add on the dependent care forms. All those forms add extra money to the cost of someone's filing.
And I would hope that the support for this would be absolutely bipartisan, absolutely across the board. When you think about the fact that what we're asking for from the state is support to run a tax preparation program, meaning we are focusing our efforts on earned income. We're focusing our efforts on folks who are out there working, sometimes working multiple jobs. But I just think it's across the board. This is something that I can't imagine why anyone would necessarily oppose. Given that we are working to try to help create a strong workforce in Vermont and provide them some support and services to do that.
Thank you both. I cannot imagine either. I mean, I certainly think it's a great service that's provided. I'm curious, I know that there's a few other different ways. Liz, you mentioned I'm going to get the name wrong. Is it My Free Tax Refund?
MyFreeTaxes.com.
My Free Taxes. And yep. I know there is getyourrefund.org for the first time that the federal government has put out. I don't know if you are familiar with that resource and could talk about it a little bit.
I think it's just a free tax filing program.
Okay.
I don't think it's any different from like the My Free Taxes, which is a sort of a program of the VITA and the TCE. So there's also available, and this is another reason why we kind of had to ramp up services, is that AARP had traditionally also helped older Vermonters file their taxes, and that doesn't have an income requirement. But you know, due to the pandemic, older Vermonters were not volunteering, right? And so they had to shut down their operations for a few years. They're back up, but they're not, I don't believe, to the extent. So, you know, we end up seeing more people that would have potentially gone to AARP are now coming to the VITA programs, because there aren't enough of them out there.
Thank you.
And, you know, we would recommend all of you folks who have, you know, who work in the social service agent, realm, or who are able to make referrals to the VITA program, please do, because it will really help us to almost be able to say we couldn't file all of the taxes that needed to be filed by April 15th, and we have to do extensions. That will give us, you know, leverage for receiving the money that we hope to have in the base budget. So advertise far and wide.
Yes, and I would love to get a copy of the slides that you presented. I have Liz's, but the slides that were presented earlier, because I was really fascinated just to see it laid out, the number of households calculated based on Vermont income that were not qualifying or were not filing for the EITC and such.
Yeah, everybody will get a copy of the slides and a follow-up email and a copy of this recording for sure. Are there any other questions out there? I don't think I see any in the chat. So I think the last thing I'll say, so two things. Thank you all for being here. This has been really great and really helpful. And one of the things that really jumped out at me that Liz and Travis were saying is, I wrote it down. Most people don't understand anything about taxes. And I think Rebecca started us off really talking about the importance of these tax credits as a tool to get people cash into their pockets. And so I encourage you to have a conversation with somebody at the dinner table tonight, or a friend or a neighbor, about, have you heard of the new Vermont child tax credit? And I would love to hear the responses, because I've mentioned it to a few friends and they're like, huh, what? And of course, I'm so excited about this credit. I think it's a great tool. I think it's something we can really build on in this state. to get people the resources they need. And so let's keep talking about it. Let's get up the momentum so that people do know kind of what's under the hood when they get their taxes filed, so that we can really continue to have a conversation in the state of how we expand this and get this to meet everyone's needs.
Here, here. Thank you, Julie.
Yes, thank you for being here on this snow day. I'm going to push it back to Kit and or Michelle for one last weigh-in.
Hi, thank you all so much. Julie, thank you, and Liz and Travis and Rebecca. I just, as a parent of young children, there's so many things that I'm thinking about and processing and reflecting on. I just want to note that we will be following up and sending out resources and a copy of the recording shortly. And if you're interested in continuing to stay in touch with Voices, you can register for our mailing list here. We also, this series is ongoing. And so I think, did I put that in the back? We have a number of really great discussions coming up on, there's one on community doulas and reproductive justice coming up on March 9th, another on youth voice and representation in court, ICWA, the Indian Child Welfare Act, and we're going to have a conversation in April with Vermont's Office of Child Advocate. So you can head, I put in the chat a link to our events page as well. We'll be sharing more details in the coming weeks with our mailing list and on social media. But in the meantime, if you're interested, you can go ahead and register. So thank you all so much. And the resources will also include a survey, which will help us to think about what sort of topics to take on in the future.
Cool.
All right, thanks again. Take care, everyone.
Bye, everybody.